Hello and welcome to this episode of the Insights Interview, where we explore the evolving landscape of finance and technology. I'm Jack Robertson, data journalist at the Payments Association, and today we're looking at how software platforms across the UK and Europe are fundamentally rethinking their role in payments. For years, platform and independent software vendors treated payments as a utility. You pick a provider, plug it into integration, and move on. But that model is now breaking down. The platforms growing fastest today are the ones that are treating payments as a strategic capability, building greater controls over how merchants onboard and how money moves. In the UK and EU, that journey is complicated by its fragmented regulatory environment, and getting it right requires more than just good engineering. Today, we're going to map that journey from just basic ISV integration through to embedded finance and explore what platform leaders actually need to know to scale payments without hitting that compliance ceiling. Joining me are Lewis Horder, Head of Platforms for the EU at PaySafe, and Joe Perry, Commercial Lead at CardStream. Lewis, Joe, thanks for coming on the podcast. Welcome.
Thank you. Thanks for having us.
Yeah, likewise.
So let's start by sort of setting the scene a bit, right? Because sometimes I think the scale of what's happening here is sometimes a little bit underrepresented. Platform and ISVs have always been involved in the payment journey at some level, but something shifted recently. So Lewis, perhaps we kick off with you. From your vantage point at PaySafe, what's changed now in how platforms think about their payment stack? And I guess as a second part to that question, why now?
Yeah, so let's start with the what. So I think platforms and ISVs used to see payments as a sort of necessary feature, and I think today they're increasingly seeing it as more of a strategic growth engine. So think of the relationship with the merchants. Whoever is owning the merchant operational workflow is now increasingly owning the conversation around payments as well. And I think historically that's been the payment provider, and increasingly that's becoming the platform. So what you're seeing is platforms evolve from sort of distribution channels to being more part of the sort of core ecosystem. And I think they're increasingly now seeing it as a revenue driver as well. So platforms are increasingly seeing payments as something that can increase their sort of average revenue per user, their retention, their platform stickiness, and the economics of that can be really compelling. Software revenue is important, but payments revenue sort of grows with the customers. So the more they scale, the more that revenue scales as well. You can get sort of really important insight into some of the payment data as well, which can create sort of broader, more embedded finance opportunities, if you like. And I guess the why now is that the technology barrier is lowered. So sort of 5 to 10 years ago to sort of implement payments, you had a massive sort of compliance overhead, engineering costs, complexities with schemes, sponsor banks, etc. And now the ecosystem's matured a lot. So you've kind of got API first infrastructure, you've got the rise of sort of payback as a service models, etc. And so platforms don't need to become payments companies from scratch anymore. They can launch sort of sophisticated models in months, not years. So I think what we've seen sort of a shift away from payments as a feature to payments as part of the platform strategy. And this sort of more accessible infrastructure means a lot less complexity to do that.
Yeah, absolutely. So I guess that progression makes sense strategically, but I imagine that journey of implementing is probably a lot more complicated than it looks from the outside. So, a lot of platforms start with that single PSP integration, but gradually want more control. Joe, I guess CardStream is exactly the kind of platform that's been on that journey. So, in your own words, what was the sort of trigger point that started you to go down that route?
Well, I guess CardStream as a provider, we service over 200 different ISVs, ISOs in the market. You're speaking with your partners on a daily basis, and you really start to see kind of what are their kind of real pain points, what are they facing every single day, which causes them all these challenges. From that, we kind of really saw that there was a lot of friction. Kind of as what Lewis was just saying, there's a real kind of a demand and driver, and a lot of that comes from the end merchants that we see. So we have a portfolio of direct merchants that we work with, and actually a lot of demand is coming from them. Kind of we live in a world now where everything's expected to be super quick, kind of one-click checkouts, your product is on your doorstep next day. And so a lot of that resonates with the merchants themselves and how they drive the products, their services to their customers, but then also upward to the platforms as well. They don't want to have to go and buy from all different sorts of different people. And the ecosystem had become so fragmented. You've got PSPs, you've got gateways, you've got acquirers, you've got the banks that sit behind that as well. And a lot of that meant it was just, well, how can we simplify that? And that was a lot of demand kind of in terms of how can these platforms take more ownership of their customers. So it's not just owning kind of the relationship because they already have that, but the onboarding journey, as we said, Lewis has said, the revenue side of things, how can they commercialize that to simplify their commercial model so these merchants aren't facing a bill for their software, a bill for their payment services, a bill from their banking side of thing. And that's where kind of CarStream really saw an opportunity, I guess, to support our partners better. And we're kind of always very much based on how can we work closer with them. And that's where kind of our PayFac as a service platform came in terms of providing a solution where they can take that more ownership without kind of going on a full journey.
So platforms often talk about the progression from basic integration through to full embedded finance, but not every business needs or really wants to reach every stage. So Lewis, how should platform leaders really be thinking about this? Is this something that every platform will inevitably move to do, or is there the right level ambition for different business models?
Yeah, it's a really good question, and I think ultimately in the end, the ambition level for a platform leader depends on a few things. So I think they've got to think about how central payments are to the workflow. So for some business types, such as hospitality, it's essential. It's a really kind of key component of that kind of operational journey, if you like, and why I mention that is you can genuinely use payments as a lever to add genuine value to the end customer with the customer experience, the workflow, the money movement, the kind of interconnectedness of all of that. So there's one, and then I think it's thinking around the deeper that you kind of go, the more responsibility that you inherit with that. So you think of things like onboarding, fraud, disputes, the sort of regulatory exposure, the compliance side, the risk, all of the associated overhead and capital that comes with that. Not all platforms will sort of want or need to do that, and platform leaders should be challenging themselves with that conversation and kind of where that sort of sweet spot is. And then you link the commercial piece into that as well. So, we talked earlier about, embedded payments can become sort of transformational commercially, but there's a level to that. So at a small level, it may not move the needle when you sort of factor in all of that overhead and resource that you need to do that. So there's sort of a sweet spot. And below a certain scale, sometimes I think simplicity can be a bit better. So it's about thinking about all of those things and sort of embedding financial services with precision, not just sort of for the sake of embedding financial services, and really thinking about that, the end customer. How do you remove friction? How do you increase conversion, retention, create new revenue streams, and sort of thinking about how natural that feels. And I think those are sort of the main things to consider, I would say.
And I think just to add something to that one, I think one thing that goes on, you get a lot of these platforms, they build up to a certain size. There's quite a lot of accelerated growth there. And they think, well, great, I can go on, I can become a regulated entity. This is the next step. This is just going to increase my EBITDA. But what they fail to see is also then running your own PayFac. I mean, there was some research done here recently, and it's still costing you between £1.5 to £2 million to not only set up, but then the ongoing cost as well associated with being a regulated entity. And as well, I remember having a chat with Lewis previously, this time last year at Money 2020, and talking about the fines that can be dished out to these regulated entities as well if they're not maintaining their compliance. So it's a case of you've got to understand, you've got to look at it right now, but in the future as well, it's not something that, great, we just do it and off we go. There is that ongoing maintenance, which is why payment providers and platform providers out there have kind of built those nuances. They've built those platforms, the modules to be able to service that. And I guess that's another thing where you look at the different models out there that are kind of intermediary sitting between ISV, PayFac. It's also then reducing that time as well. Getting a license is still no quick process. You're going through a 12, 18-month process. And so then you've got things, systems, right, okay, well, what do you do in that period of time? And so I think there's some good options there.
Yeah.
And especially, I think, to add to that a little bit more, in a world where fintechs are scaling very, very quickly, so you can't really afford to wait 12, 18 months for these things. And you've kind of got trendsetters, you need to be fast adopters in some cases. So, sort of time to market, speed, race, etc., all of that, I think, becomes sort of really important. And yeah, we talk to lots of sort of new PayFacs and who have gone that sort of full that full fat, as we call it. They sort of obtained a license, starting to build teams, and it's hard. It's hard to. You've got to think about how do you differentiate. I think there's 500 or so sort of registered PayFacs in UK and Europe now, and that's sort of growing a lot. So where's that sort of sweet spot, and how do you scale that? And in a world where sort of we talk about payments as a revenue generator, but you've got very compressed margins there as well. And when you factor all of that in, and as I say, the sort of some of the challenges that sort of PayFacs are starting to have now, then you've got to really think about that. It's a significant sort of ongoing piece of work and projects and investment and capital resource to be doing that.
So we've sort of started to touch on the complexity of regulation there, right? From KYC, KYB, safeguarding, multi-jurisdictional compliance. Does the regulatory environment in the UK and EU shape the choices platforms have available to them? And I guess, where do platforms most commonly come unstuck from some of those complexities?
A regulatory question, my favourite. I guess the simple answer to it is there for a reason. I think it's there to safeguard, it's there to provide a responsible governing body, which is really important. I think it can easily be looked past. People look at regulations and think, oh no, it's just a lot of red tape. But actually it drives a huge amount of innovation as well. You take the likes of PSD2, open banking, SCA, it kind of creates a better consumer protection, which I think gives confidence as well to not only the platforms, but also the merchants as well. And so when you're looking at that, I think when you go back a few years of just becoming a PayFac, the amount of obstacles that you face to be able to do that, removing the cost side of it, as Lewis was touching on, there's a huge amount of areas you have to think about. And I think this is where some of the propositions, the PayFac as a service propositions, the embedded finance solutions, because they are looking at it from a regulatory point of view, they're taking that into account and almost lifting that headache away from the platforms. It's not saying that they don't have to think about it at all. It's still important for them to do that. But again, they're a platform. They still want to do the service that they're providing. Yes, payments is an opportunity and it definitely should be embedded. But there's also a case of how much do they want to get involved in that? And there is a lot of things that can provide and service that. And so I think where your question, going back to it, where platforms come unstuck, I think they look at certain areas, what can they address? The onboarding friction, incomplete KYB processes, but there's a lot more to it than that, which the regulators have taken into account of, and they've worked closely with different payment providers, the card schemes out there, the banks, to understand, okay, what is the different things that are going? And with innovation and the amount of change that is going on, it's constantly changing, and that's almost our job as the providers to be able to take into account of that. And so a lot of platforms out there aren't really, it's not they're not built for that. They could do that, but once you start talking about becoming a PayFac, you need compliance teams. You need 4 or 5 people who can look at that. And that's quite an expenditure. And so to be able to kind of offset that, outsource that to a provider, I guess that's kind of a real way I look at it.
This brings us to the question, I suppose probably both of you have quite good comments on that build versus partner discussion, right? One of the central tensions in this space is whether to build payment capabilities in-house or partner with a specialist externally. So, Lewis, I'm sure you see this all the time, these decisions being made at PaySafe.
Yeah.
What do platforms typically get wrong in that evaluation, and what separates a partnership that really delivers a valuable outcome in comparison to one that doesn't?
So I think we spoke about quite a bit of it there, and Joe sort of explained it really well. I think the complexity is a key one, and so many times we sort of speak to platforms, platform leaders who maybe haven't sort of understood and grasped the real complexity underneath. So not just that sort of compliance, fraud, scheme, regulatory side as well, but then also thinking about scale and flexibility as well. So, you think of going into new geographies, for example, and if a platform were to enter certain markets, you need an entirely different payment proposition to service the consumer needs there. And that's quite fragmented across Europe and is still evolving at pace as well. So, and then we talk about the speed at which fintechs are, or payments is changing, fintechs are changing as well. So to be able to have that flexibility, I think I think is sort of really, really important. So I think a lot sort of don't think about that. They're thinking about, okay, great, I can offer a really good UX and have control, but don't really think about what control means and don't sort of think about the real complexity, and actually maybe not realizing that you can sort of have control by still being close to the sort of operational workflow that we spoke about earlier without necessarily needing to sort of build it in-house, I would say. And I think the other thing that that payments leaders don't always think about as well is that culture fit. So you need to think to work with a partner that gets you to where you want to go from A to B, and can kind of think about that whole ecosystem and sort of be really aligned with being an enabler for you, regardless of where you are in that ecosystem. So we talk a lot about PayFac Lite here, and sort of having a partner which you can sort of build with, but think of licensed PayFacs as well, and when they're choosing sponsor banks to work with, and especially in those more complex, highly regulated areas as well. I think you've got to have a partner who is really going to understand your business model, where you want to get to, and have total alignment with that partner as well. And that can be from a commercial side, from a risk side, from a strategy side. I talk to payments companies all the time who are coming to us, and they're sort of really identifying that as a pain point where they've really got it wrong, and that's caused them so much problems, or so many problems, I should say, as they're sort of trying to scale. So yeah, I think there's a lot there.
I think there's almost two ways to unpick that question, in the sense that you've got the ISVs who are interested, they've grown, they've accelerated, and they can look at that PayFac journey. And I listened to a really interesting talk, and the way the analogy of it was presented was they almost stand on the edge of a cliff. And do they take that plunge of becoming a regulated entity, going through that process? We've already talked about how long it takes, the cost associated, etc. And there was never really any options before that.
Yeah.
And I think that's the great thing about innovation. We've already talked about what the regulations bring to that. I think it brings that innovation, and there are now different options. So I think it's a case of before it wasn't a case of, well, do I build, do I buy, what do I do? You just had to go for it and take the plunge. Whereas now, I think, as Lewis was touching on, there's a lot of good platforms out there and a lot of kind of knowledge as well. And in an ecosystem where it's very fragmented, it's starting to converge a lot more on these platforms, even though modular. So you might find that you want to build certain parts because you've already done that. You've already taken that investment, but actually that's only got you 1/3 of the way. And so you need 2/3 from a partner to work with. But then I think you look at it from the banking side of things, you see a lot more of the neobanks trying to move back into this space. And they've already underwritten their customers. They know their customers. They don't need a lot of that side. But again, they only know about the banking, and so they need the payments expertise. So that's where they're kind of coming to it from as well. And do they build it? Actually, it's simpler for them to partner on that side as well.
Yeah, totally agree.
Absolutely. So we've covered a lot of ground today so far, but if I'm to ask you to both sort of put your future gazing hats on for a second, obviously embedded finance, agentic commerce, real-time rails, and AI assisted underwriting. Lots of new. I'm sure both of you are probably very close to it in terms of the verticals across payments. But looking at the UK and EU specifically, what would you say the next stage of platform-led payments actually looks like? And which are the platforms that are really best positioned for it?
I mean, there's a lot, as you say, but I think one of the biggest shifts we're seeing is that platforms are moving sort of beyond payment acceptance into actively managing money movement inside their ecosystems. And you think about things like wallets, think about instant settlement, think about embedded payouts, think about sort of real-time rails, and where that can sort of become really strategically important. And we spoke earlier about operational efficiency and being close to that workflow. And you think about things like liquidity optimization, and that can sort of become really key. And sort of they're almost payments being not sort of a disparate thing from a sort of separate process, but more just a sort of task, if you like. And think of a marketplace. So think of Vinted, who sort of recently just obtained their own license, and Vinted obviously connecting buyers and sellers for secondhand clothes. And you think of a sort of I believe they're looking to build a wallet infrastructure, and think of the use case there where, a buyer can go on and sort of buy a t-shirt and immediately those funds could be dispersed straight away to that seller, instant availability, and think of the benefits of that, and both for the sort of end customer and for Vinted as well. And then you think about how that can be built on as well in the future, and you talk about things like AI, and AI can be sort of dangerous as a sort of buzzword, but you start to see sort of real use cases like, for example, predictive payouts or something like that. And I think that's a really interesting area where we'll see where we're certainly seeing a lot of sort of movement toward an evolution already, with some sort of real good examples in market.
Anything to add, Joe?
I think, for me, it's something that we've already touched on, is the balance of power is shifting. ISVs now, it's like 60% of merchants these days are shopping from the software that they buy, and they're no longer going to their acquiring banks, their payment providers, to get these services. And I think that whilst a lot of ISVs are aware of this, there's a lot of them out there that aren't. And so you've got a lot of payment providers, acquirers that are taking great interest in this and building out how can they build a better proposition to help service their platforms that they're working with. It's gone are the days where, all right, we've got a platform, a partner ecosystem within us where we have partners who refer business to us. And this has gone to the extent now where even the card schemes are taking a great interest in this. They're really interested in what platforms are doing out there. How can they support them better going cross-border? So we're not just talking from a UK and EU perspective, but you've got a lot of platforms out there in Asia, North America, that are looking to enter the UK and Europe. And so it's how do we address those cross-border complexities? And I think that's where, when we talk about embedded finance solutions, specifically PayFac as a service solutions, it can start to tackle those cross-border challenges that you face and really start to simplify it and start to create a system where platforms can service their merchants globally. It doesn't matter where they are, what payment method they need to take, it's all handled within that single platform. And then you throw into, on top of that, the likes of AI and how that can even start to service it. We haven't even touched on agentic commerce, which is a real buzzword in payments at the moment. You start to factor that into the platform as well, and it just, really starts to accelerate. So it's really exciting times.
Yeah, absolutely. A fascinating discussion. Thank you both for sharing your insights.
Thank you very much.
Thanks for having us.
Cheers.
What comes through clearly from this conversation is that the payment journey isn't a single decision, it's a continuous set of choices about how much control to take and, of course, when. The platforms getting it right aren't the ones that are moving the fastest, they're the ones that are moving most intentionally, with the right foundations in compliance, onboarding, and risk before they take the next step. And to our listeners, thank you for joining us on this episode of the Insights Interview. If you'd like to learn more about PaySafe, do visit their website for further resources.